We're excited to dive right back into the numbers. Today, we're going to be talking about the inflation numbers that came out this week in the Euro area, a couple countries, France, Germany, and Italy. Then we'll eventually get into talking about what happened at the Jackson Hole meeting and what kind of the outlook for the US is. So we see the Euro area, their inflation is at 2.2%, which is coming closer to their target of 2%, so quite close. What's interesting here is seeing the major economies in the European area, or the Euro area, of Italy that has 1.1% inflation. They beat forecasts of where they thought they would be. Germany is 1.9, also beat forecasts. France is 1.9, but they didn't beat forecasts. But we see the three really major economies in the Euro area with inflation within target levels. So that kind of points an interesting picture. I guess the only caveat there is their GDP growth numbers are quite low. So they're not outpacing their inflation numbers. And so it kind of puts a perspective into where the economy in the Euro area is at the moment.
Yeah, and especially last year we talked about China as well and how inflation was developing there. And a word or a term that was coming up quite a bit was stagflation. And that's also now the question in Europe. We have talked about the negative or flat GDP growth they had, so not really growth there. But inflation is still high and inflation is still above 2% in the euro area in general. Yeah, we see that certain economies are below that, but 1.1% is quite a bit below this 2%, which is, as far as I know, the target level. So, yeah, it's the question, as you pointed it out correctly, is really how is it in relation to the GDP growth and will GDP growth pick up? And there were also discussions and are still discussions about how the ECB should react to that, whether they should lower interest rates, whether they have already reached their target or their goal, or whether they should still stay a little bit conservative and wait for more signals coming in. And as it was the case with the increasing inflation numbers we have seen since 2021, if you wait too long, it can harm the economy as well. But if you're not waiting long enough, then you can harm the economy even more because inflation can re-accelerate. And so it's a really thin path they're moving on.
Yeah, and I think that's what I always find interesting is, where stagflation comes up, it's like, all right, so we have this stagnant economy in Europe, higher than we want in inflation in the euro area, also in the European Union, it's actually a little bit higher. But again, you kind of have this stagflation. However, inflation rates are coming down. It's not that they've stayed persistently high, especially in Europe, they moved them down much quicker than in the US, who's not even seemingly within eyeshot of getting to I guess, their inflation target by the end of the year. Maybe. I mean, maybe you could see that, but my outlook is that they won't be under 2% or at 2% by the end of the year. So you have that persistent inflation where they had that stagflation in Europe, but they moved them down a bit quicker. I mean, it's interesting to watch Italy. They hit at one point, I think, 11% inflation. So they hit inflation high, but then they dropped inflation low back down to 1.1% very quickly. So you just see a spike in inflation. And so now, from my context is like, yeah, you want to, like you said, not take away the interest rates immediately that inflation spikes again, but will they try to hold it at a healthy level to, I guess, stabilize that inflation level, get the momentum moving there in a stable inflation, and then start to relax? I think probably they'll start lowering inflation. They might keep interest rates obviously not go to zero, but I think there probably will be some movements back again, as you said, to walk that narrow line of, hey, we need some economic growth.
Yeah, and I think another point you have to take into consideration is how this Euro area countries work.
Yeah.
There is quite a bit of social concepts in these areas. And one thing you see, one of the main drivers is the services industry, where it becomes quite expensive and drives inflation. It's like up 4%, while energy has come down quite a bit. And if you look where the levels, the energy prices were, a year ago, then it totally makes sense that it has kind of a counter movement. But you really have to look at that and be careful that you don't fall in this like price salary spiral, which
Yeah.
is highly feared.
Yeah, and that's, I mean, obviously wage growth. We saw that with Japan,
Yeah.
leading to their uptick in inflation numbers a few weeks back. So that always is a concern. Often not talked about when people are going for more wages. Is, hey,
Right.
this is going to lift inflation because we're going to, flood the economy with even just small jumps up in minimum wages or wage growth. At the same time, I think it's kind of a good picture to see the US and the European Union, what they're going through right now. What are the central banks going to do? I mean, we just had the Jackson Hole meeting in the US
Yeah.
take place. And there, we saw some pretty dovish, but not totally dovish statements from Chairman Powell. And I think that really kind of sets expectations of where do we move now? The US, they've had a trend of lowering inflation, not to their point where they want to be, but they're starting to worry about the labor market, especially with these crazy revisions coming out
Yeah.
from the US job market. So, it kind of makes me a little bit untrustful of the data coming out of the US, especially the amount of revisions we're talking about. But it is interesting to see that a lot of people are talking about, rate cuts happening in September. I think there probably will be one, but how do we move from there?
Yeah, I think the stakes are very high in the US. The expectations are so high towards a soft landing, and that's also where Sharon Powell pointed to that they are quite confident that they can achieve it. But as I already stated with the euro area, I mean it's a thin path they're moving on. There is not much or needed that it brings the like the balance out of yeah, well,
Yeah, to throw the balance out of control.
yeah, correct. And so, I mean, we've seen it also at the markets at the beginning of August. It's very volatile, very insecure. We have seen it, all the nervosity that was coming in with the numbers published by Nvidia this week. And so, investors are really looking for this confirmation that we have gone through it. We have achieved it. And there are still some doubts. And also, you can't just look at the inflation numbers at the CPI. You also have to look what happens at the money supply level, the M2 level. How is the Federal Reserve acting on this or on this side?
Yeah.
And so there are a couple of data points coming in and contributing to whether it will be a success or not.
Yeah, and I think that's a really good point to bring up about the M2, because you not only have the M2, but also the buybacks from the Fed,
right?
And how much they're, I guess, flooding into the economy or taking out of the economy. We've already seen them kind of take actions to shore up some of their flow of capital that's in the markets. How strong the Fed does that will be quite interesting. I mean, we saw remarks from former President Donald Trump that he said the Fed shouldn't cut any rates before the election. That is, for me, a pretty clear sign that he wants things to be challenging, has a better opportunity. And I'm sure on the other side, there's probably some politicians that are against him that really want those rate cuts to come. I mean, the speculation that you're talking about with some of these, I guess, information being published on these companies, good reports, negative reaction at the market. We see gold still going higher and higher, which is a historical view of how nervous people are. People flood to gold when they're a little bit nervous and they don't see better opportunities, or they think something else is going to change. So we have a lot of conflicting, as you said, kind of data points and signals that we're trying to observe to see, okay, where's the U.S.? And I would agree to your point. We're at a point in the U.S. where they're either going to hit the mark or they're going to miss, and it's going to throw off in one direction or the other. We have an announcement that we're going to make. We're going to be ending our weekly series. We're going to not get rid of talking about the economy and our outlook and our analysis. We're just going to shift it to every 6 weeks. We do a newsletter called the Swiss View that we publish every 6 weeks, where we give our market overview. Urs is the author of it. We all proofread it, but Urs is the mind behind it. And so what we're going to do is stagger 3 weeks after that's released. We're going to kind of go through some of the points we were talking about there and see how markets have developed. So if you're watching this video and you haven't signed up for our newsletter and you want to get that, there's going to be a link in the description where you can sign up so you can get that and follow along with these videos. We're really excited about this project. We think it'll be more insightful and in-depth, that we can give broader pictures, might be a little bit longer videos, but something that can give you some tangible overview of the global markets and what's happening and how we kind of see it.
Wonderful.